Assalamualaikum. For this video presentation, we'll be comparing Malayan Banking Berhad and Public Bank Berhad based on MFRS 8 and MFRS 134. Firstly, let's take a look at Malayan Banking Berhad, or better known as Maybank. Maybank was established in 1916 in Kuala Lumpur and has successfully grown into one of the largest banking group in Southeast Asia. The bank offers a wide range of financial services, including retail banking, corporate banking, investment banking, as well as Islamic banking for both individual and businesses. Furthermore, Maybank has expanded its operation across several countries in Asia, which strengthened its reputation as a leading regional bank. In addition, the bank places strong emphasis on digital innovation and technology in order to provide more efficient and convenient services to customers. As a result, Maybank is recognized for its strong market presence, continuous growth, and modern banking approach. On to Public Bank Berhad. Public Bank was founded in 1966 and is widely known as one of the most stable, well-managed banks in Malaysia. The banks provide various financial services such as retail banking, commercial banking, and financing services for both individual and businesses. Moreover, although Public Bank mainly focuses on the Malaysian market, it has also expanded its presence to countries such as Hong Kong and Vietnam. The bank is especially recognized for its excellent customer service, prudent management, and consistent financial performance over the years. Therefore, Public Bank has built a strong reputation for reliability and steady business growth within the banking industry. Overall, both Maybank and Public Bank are among the major banking institutions in Malaysia. However, each bank has its own strength, strategies, and business focus. Let's conclude this section, and now we will continue with the next part of the presentation.
Now, I would like to briefly explain MFRS 8 operating segments. MFRS 8 is an accounting standard that requires companies to disclose information about different parts of their business, known as operating segments. An operating segment is a part of a company that carries out business activities and can earn revenue or incur expenses, including transactions with other segments within the same company. Has its performance regularly reviewed by the Chief Operating Decision Maker, CODM, to make decisions about resource allocation and to evaluate performance, and has separate financial information available, such as its own revenues, expenses, and results. The main objective is to set out guidelines on how a company should report information about its operating segment in both annual and interim financial reports. It also set out disclosure requirements for product and services, geographical areas, and major customers. This information is important because it helps users of financial statements to better understand their company's past performance, assess its risk and return, and make more informed judgment about the company.
Next, I will explain about the Chief Operating Decision Making (CODM) that refers to a function within an organization rather than a specific job title. It is focused on the individual or group responsible for allocating resources to operating segment and assessing the performance of task segment. The CODM can be a Chief Executive Officer (CEO), Chief Operating Officer (COO), senior management team, or even the Board of Directors. What truly defines a CODM is not the title they hold, but their strategic authority within the organization. In other words, the CODM is the person or group that has the actual power to make key strategic decisions regarding the entity's operating segment. For this slide, I will explain the example of Chief Operating Decision Making (CODM) in real organization. On the left, we have Datuk Khairul Ramli, who is the President and Group CEO of Maybank. On the right, we have Tan Sri Datuk Sri Dr. Teh Ahlak, who is the Managing Director and CEO of Public Bank. Both of these individuals are considered CODMs because they hold the strategic authority to make key decisions within their organization. They are responsible for allocating resources across different business segments and evaluating the performance of that segment.
Next, we will look at the type of segmental report for Malayan Banking Berhad and Public Bank Berhad. Firstly, for Maybank, the bank segmental reports include business segment reporting. Maybank's business segment consists of community financial services, global banking, as well as insurance and takaful services. Among these segments, community financial services is the main contributor because it's mainly focused on retail and SME customers. But furthermore, this shows that Maybank strongly focus on providing financial services to broad customer base. On to the geographical segment report. Maybank operates in multiple countries, especially in Malaysia, Singapore, and Indonesia. Moreover, this reflects bank's strong regional presence and diversified operation. As a result, the bank is less dependent on a single market, which can help reduce business risk and support long-term growth. The Public Bank Berhad, the bank segmental report is also divided into business and geographical segments. For the business segment report, the several segments such as retail operation, hire purchase, and corporate lending. Retail operation contribute the largest share of revenue, showing that it is the core business activity of the bank. In addition, this highlights Public Bank's strong focus on consumer banking and financing service. For the geographical segment report, most of Public Bank's revenue comes from domestic operation in Malaysia, with a smaller contribution from countries such as Hong Kong and Cambodia. Therefore, this indicates that Public Bank is more dependent on the Malaysian market compared to Maybank, although it still maintains for some international operation. Overall, both Maybank and Public Bank use segmental reporting to evaluate their business performance more effectively. However, Maybank demonstrates wider geographical diversification, while Public banks focus on more stable domestic operation.
Next, I will explain two key benefits of segmental reporting. First, it helps users achieve a better understanding of business performance. This is because users can evaluate how each segment performs instead of only looking at the overall company result. Second, it allows better assessment of risk and decision making. Since different segments operate in different economic environments, users can better evaluate the risk involved. Next, this is an example from Public Bank's segmental report. From the report, we can see that retail operations contribute the highest percentage of revenue and profit, which is around 49%. This shows that retail operations are the main driver of the company's performance. From this report, users can identify which segments is the most profitable and compare performance across different segments. Lastly, this is an example from Maybank's segmental report. We can see that Malaysia contributes the highest income, while other regions such as Indonesia show weaker performance. This indicates that different geographical segments have different levels of performance and risk. This helps users to identify high risk or underperforming segments, assess the stability of earnings, and make better investment decisions.
Look at the definition. Interim financial reporting refers to financial reports that cover a period shorter than a full financial year. For example, companies may prepare reports quarterly, bi-monthly, or semi-annually. This helps provide more frequent financial information instead of waiting until year-end. Next, the objectives of interim financial reporting are, firstly, to ensure timely updates on a company's financial position and performance. This allows stakeholders to stay informed about how the company is doing throughout the year. Secondly, it supports market efficiency by providing relevant information regularly. This helps investors and users make better and faster decisions. In terms of applicability, interim reporting is not mandatory worldwide. However, in Malaysia, it is required for listed companies under Bursa Malaysia rules. These companies must prepare quarterly reports within 2 months after the end of each quarter, so it is an important requirement for public companies in Malaysia. Now, let's move to the content requirements. The minimum requirement is condensed financial statements. These include SOFP, SOPR, SOCF, SOCE, along with selected explanatory notes. Additionally, companies must include comparative figures. This means they need to show data from previous interim periods and annual periods for comparison. First, recognition and measurement. Companies need to assess materiality specifically for the interim period. This means focusing on important financial information within that shorter time frame. Also, if there are changes in accounting policies, prior periods must be listed to ensure consistency. Lastly, key disclosed areas include consistency in accounting policies, any significant changes in estimates or unusual items, events that occur after the interim period, and important segment information. These disclosures help users better understand the company's financial situation. In conclusion, interim financial reporting under MFRS 134 provides timely and relevant financial information, which is essential for decision-making and maintaining transparency in the market.
I will discuss the first significant event affecting financial performance, which is operating performance based on the interim report as of 30 June 2025. For Maybank, the group profit before tax recorded was RM 5.02 billion for the half year ended 30 June 2025. This indicates a strong operational performance and effective cost revenue management. Meanwhile, for Public Bank, the profit attributable to equity holders amounted to RM 3.5 billion for the same period. This reflects stable earnings and consistent financial performance. Overall, both banks demonstrate a solid profitability, which highlights their strong operating efficiency and performance during the period. Next, I will explain the second significant event, which is the capital distribution, also based on the interim report as of 30 June 2025. For Maybank, the board declared an interim dividend of 29 cents per share for the financial year ending 31st December 2025. This shows the bank's ability to reward shareholders while maintaining the financial stability. On the other hand, Public Bank reported that dividends paid during the interim period amounted to approximately Rm 2.12 billion, indicating strong cash flow and commitment to shareholder returns. In conclusion, both companies not only performed well operationally but also maintained consistent dividend distribution.
This slide shows the interim reporting periods in accordance with MFRS 134. Using Maybank as an example, we can see that companies present both the current period and the comparative period to allow users to make better comparison. For the statement of financial position, the current period is at 30 June 2025 compared to 31 December 2024. For the profit or loss statement, companies report both the quarterly result, such as the second quarter ended 30 June 2025 and the comparative quarter in 2024. They also present cumulative result, for example, the 6-month period ended 30 June 2025 compared to the same period in 2024. This same reporting structure is also applied by other companies like Public Bank Berhad. Overall, this ensures consistency, transparency, and comparability in interim financial reporting under MFRS 134.